Today, on this episode of the Unity Trading Group podcast, we speak to David Moadel. He's the Chief Financial Educator, Consultant, and Investor over at PortfolioWealthGlobal.com and also a financial writer at CrushTheStreet.com. Now, this is an episode that I was particularly excited to film after coming across David on YouTube a few years ago now. And what I respect about him is not only the great financial education that he provides, but the way in which he can break down these very complex strategies into these easy to understand and digest explanations. Now, we dive into a few beginner mistakes and strategies that we can do and avoid for those looking to enter the market, and for those who are already in the market, some common mistakes that we see them making as well. So you can find David on the Twitters, on the socials, Moadel. I highly suggest you look him up on YouTube first to see what I mean about his explanations. So please enjoy this chat with financial educator, consultant, and investor, David Moadel. All right, guys, thank you so much for being here. Today we have David Moadel. Thank you so much for being here, David.
It's a pleasure to be here. Thank you for having me on.
All right, so for those who don't know about you, give us a little bit of a background about you and where you are from and how you got involved in all of this and your wealth of experience that you have.
Absolutely, and thank you for having me on your show. I appreciate it. I hope that everybody subscribes right now if they haven't done it already. My name is David Moadel, and I'm associated with PortfolioWealthGlobal.com, and they have a great newsletter, and they have reports and articles. I also write articles for CrushTheStreet.com, and you might see me on there. And I have a YouTube channel called Looking at the Markets with David Moadel. If you just want to go to YouTube, type in David Moadel, Moadel. That'll be great. And I've been trading and investing for a long time, probably longer than a lot of people who might be watching this. If you have a large millennial audience, which is cool. I love the millennials. I like the open-mindedness of the millennials. You guys are really taking the bull by the horns and doing your own investing a lot more than you're just walking into a bank, Wells Fargo, Bank of America, whatever, and just handing over your money to a money manager, fund manager, and just saying, okay, you do whatever you do with it. The millennial generation is using the Robinhood app and is getting into cryptocurrencies and is getting into self-directed trading and investing, which I think is really cool, although possibly dangerous as well if you don't know what you're doing. And so what I do is I try to help people, and I coach people privately as well, so that I do it over Skype and over the phone, so that people won't have to make all the mistakes that I made when I was first learning all those years ago.
Yeah. And that's a great segue into sort of learning. Your father was in the same sort of industry as well. And, I think a huge thing for a lot of people getting out is having a mentor such as yourself as well, that you do through your one-on-one sessions and all of your mentoring online, which in fact, I was just saying to David behind the scenes, David was one of the very first people that I came across on YouTube a number of years ago, where I started learning his teaching techniques thanks to his background and the way that you so clearly explain things and you can break them down into these simple things. So I highly encourage you to jump on David's YouTube channel if you haven't already. He just has some really fantastic content on just about everything. I think if I can just about go to YouTube and type in David Moadel X, and there's a video there where David has explained it. So that's really fantastic. But like I said, your father was a huge influence on your trading life. What was some of the most valuable things that he taught you and that you've maybe instilled that you teach to your students as well?
Yeah, thank you for asking that. My father is now 84 years old, so he's been through it all. He's seen it all, done it all in the markets. And when he first started training me or teaching me his principles, which are in the Warren Buffett, Ben Graham, Charlie Munger school of buying when there's blood on the streets and being very patient, that you don't have to swing at every ball that's pitched to you. In fact, it's different than, and this is from Warren Buffett as well, but my father passed this idea on to me, which is that trading and investing, it's not like baseball where you're at bat and that if you don't swing at any of the pitches thrown to you for a long time, you get struck out probably. It's not like that. If you don't see a good setup for a long time, you could just let ball after ball after ball go by and just swing at it when you're ready, if you're ready. So of course, I didn't want to learn that lesson when I was 18, 19. And so I, lost a lot of money back then, but thank goodness I didn't have much money to lose because I was young.
Yeah.
If I lost all my money now, that would be pretty tragic.
Yeah.
So finally, I started to listen to my father. Believe it or not, it can happen eventually. I had to learn the hard way. And he taught me those kinds of principles about patience, about position sizing. Back then, I wanted to throw everything into one trade. I wanted to only do speculative things, highly risky things, which there are a lot more of now. Back then, something like Apple might have been a riskier play.
Mm.
Nowadays, Apple is almost a safety stock, if you will. It's something that just might get you 10, 15% per year. It's slow and steady wins the race kind of stock. Same with Microsoft.
Mm.
Not so much back then, but now it's more of a safety play.
Mm.
Now there are a lot more speculative options, which if you're younger or if you're newer to investing, you got to be careful with those because you've got cryptocurrencies, which are speculative. You've got more penny stocks. You've got smaller marijuana stock companies that are very speculative. You've got so many, metals and mining stocks that are very speculative. And I love all those sectors, but only certain plays, certain picks, and I only take smaller position sizes because you can lose everything in those more speculative, highly volatile positions there. And my father taught me to go easy on those and balance them out with some more safety plays, like owning physical gold and silver, for example, or having some blue chip stocks, your Disney, your Coca-Cola, ExxonMobil, that kind of thing. So balance was another thing that my father taught me. And he's still trading and investing to this day. And I wish that everybody had a dad, father like I did and do. But most people don't. Most people's parents wouldn't even know how to teach them those principles. And I taught at the elementary school level. I taught fifth graders, which is 10 and 11 year olds for a number of years. I've taught at the high school level. I've taught at the college level. And at none of those levels did they really give any good, solid financial education. They forced people to learn trigonometry, and that's all fine and good, but they didn't even teach how to do basic investing, how to balance your checking account, that kind of thing. What is an APR, annual percentage rate, for when you take out a loan or a credit card? You wonder why so many people have so much credit card debt and they're paying 14 to 21% APR, annual percentage yield. Yeah. So many people don't know what that is because they didn't teach it. And so I try to fill that gap for my coaching students and clients. And if anybody is interested in that, they can email me, David Moadel, Moadel @gmail.com. And I can, help you. I mean, it's coaching and I work one-on-one with people, so I can tailor the lessons to you. But whatever you do, don't just go it alone. Get a mentor, get somebody who's been doing this longer than you. It doesn't have to be me. And who actually has made money in the markets. It's okay if they lost money along the way to their journey, as long as they're really profitable now. And pick a mentor that actually trades or invests, not just somebody who talks about it and sells a product.
Yeah, I love that. So much of what you just said then applies to us here in Australia as well, in the way in which our elementary, high school, and even college systems teach our people. There is no solid, strong financial foundation here in this country, and we wonder why so many young people now, or millennials like us, who are in debt and struggling and have these exorbitant loans for cars that they'll never be able to pay off, and housing, and you hit a lot of nails on the head there. So you touched on a couple of things a second ago as well. You spoke about these speculative stocks, and I've watched your videos and read your blogs a number of times speaking about marijuana stocks, where you've been a little bit bullish on those, as Adam and I are here in Australia as well. So, if we are going to be jumping into speculative stocks, or I'm someone with a little bit of limited trading knowledge, what are you doing to clarify these companies or to clarify these speculative investments? How would you go about that for someone?
Yeah, vetting is an important process. You've got to subject each stock and each company to a thorough examination, because these small and microcap stocks represent small businesses, and 7 out of 10 small businesses fail within 5 years. Yeah. And among the cryptocurrency world or the marijuana stock world, it's probably worse than that. Uh, so I've done enough ICO reviews, initial coin offering reviews,
Yeah.
and penny stock reviews, which are sponsored. And it's interesting. I'll get paid to do a review, and then I'll check back with that company months later or a year later, and sometimes they won't even be in business anymore.
Yeah.
And so you got to be careful out there. Just because I recommend something, if anybody recommends something, that's not reason enough to go and buy it. So what you want to do is you want to have a set of criteria to check to see if it's a good company. Now, we can't all be like Warren Buffett, who actually gets on a plane and goes and visits the factory and speaks with the CEO personally and all that good stuff. All right, we can't all do that, but we have something called the internet, so there are no more excuses. We have Google, in which you can do on your phone. You don't even need a laptop anymore, and you can do the research on your own. I say R and R, research makes you rich over time, not overnight. So there's no excuse not to do research anymore. It's not like when I was younger and you had to go to the library, the public library, or the university library, if you live near one, and actually look at, there's a thing called books, folks. If you're younger, you might remember them. And you actually had to go and look up books to do research, and they were out of date usually. Nowadays, you have Google or Bing, whatever you use, and you can do the research on your own. So there's no excuse not to. You want to look at the company's fundamentals, not just the chart. I do a lot of chart videos, but I try to instill fundamentals in my coaching students as well. In fact, I usually go over fundamentals before technicals, if anything. So you're looking to see if it's a consistently profitable company. You want to see if they have visionary leadership, solid leadership. If they have a new CEO or president every 2 years, yeah, that's no bueno. That's a problem. So you want to see if they are beating estimates for earnings on a consistent basis. For example, Apple. That's an example that everybody knows. Apple beats earnings more than they miss earnings. But even a great company like Apple is going to miss earnings from time to time. So don't expect them to be perfect. All right. And recently, Apple went down substantially, for them at least, for their stock, because they're selling fewer iPhones than usual. Okay, so they're selling half a gazillion iPhones instead of a full gazillion. All right. They're still an amazing company. And so when they dipped, I recommended that people get in, and now they're up. So, but do they miss earnings every single time? No, that would be a red flag. Apple's a great example because they're massively profitable. They have huge brand name recognition. They're sold internationally. People use the iPhones and iPads and iTunes, things like that, in Asia and in Europe. You could tell me where you're at. Is it that big over there like it is elsewhere?
Of course, yeah. Melbourne here in Australia, we're the capital for that sort of stuff. The tech capital. Yeah. Everywhere you go, it's synonymous, isn't it?
Yeah. Okay. So, I don't know the Australian scene as much as I should. I should research that more. That's my fault. Okay. But I try to research, I'll go on Yahoo Finance, Google Finance, Bloomberg, whatever it is. And Market Watch is another good one. And I know these are mainstream media sources. So you have to use your own common sense and think for yourself. Don't just believe them either. Got to be careful of the corporate media as well.
Yeah.
But and then I check the alternative media sources like Crush the Street, Portfolio Wealth Global, Wealth Research Group, all those good ones. Yeah. And then I make my own decision as to whether this is a company that's going to consistently be profitable over time. Then I look at the chart. And if it's down for no good reason, like Apple, okay, they sold fewer iPhones. They're still selling a lot. I'm in America, you're in Australia, and halfway across the globe, they're still selling a lot, no matter who I talk to, probably. Unless they're in some, far off region in the world. And I'll bet even there, they know, they're at least aware of Apple products. So, yeah, those are just a few things that I look for. And I discuss that more in depth with my students.
Yeah, and that sort of leads me to your next question. You do offer your one-on-one coaching clients, which we mentioned beforehand, and you've interviewed a lot of people as well. Are those some of the more common traits that you instill in your students in terms of the fundamental analysis, or is there any other key traits that we should be looking to adopt as beginner traders that we could come to you for as well?
Sure. Yeah, I would say you want to have small position sizing. I'm always reminding people of that. Don't make you don't have to make the same mistakes that I made a long time ago. There's that old saying that you're not a real trader until you blow up at least one account. Well, that doesn't have to be true. You don't have to. Okay.
Yeah.
That's one way to learn. That's how I learned, because I didn't want to listen to my dad at first. But you don't have to go through that gut wrenching horror of blowing up a trading account.
Many of us will, though, I think, and many of us have. It's that ego that gets in the way of our trades a lot of the time, and then next minute, half our portfolio is gone, and we're ready to quit.
That's right, and that leads to dovetails with the next thing I try to instill in people, which is removing emotions from trading and investing as much as possible. Fear on the one hand and greed on the other. So knowing when to get in and when to get out. Are you going to use stop losses? If so, how do you establish them? I've made videos on those, but a lot of people just need a little more one-on-one guidance. That's cool. There's no shame in that. Things like studying the fundamentals before you get in the technicals, because if you look at the chart first, a lot of people are tempted just to look at the pretty chart, and they don't want to read all those words and news items and 10Ks, 8Ks, 10Qs, all those financial reports. They don't want to read that stuff, but you got to discipline yourself to read what the company is about first. Even if it's not a company, even if it's a commodity, currency, cryptocurrency, you still want to read the fundamentals. You're just doing it differently. Fundamentals means something different for a currency or a commodity than it would for a company, for example. You can't visit a factory or even read about a factory online if it's gold or oil or something like that, or the euro versus the dollar or Bitcoin. But you can and there's no CEO to look at. Satoshi, you can't find him for Bitcoin. Okay, he's a mystery. What you can do is research the macro environment. Okay, so if you're going to try to trade one currency against another, you've got to learn about the political and economic and social situations in the two countries or regions where those currencies are situated.
Great advice.
Yeah, which is why or for oil, for example, don't just study the price of oil. Don't just look at the chart. You have to learn about what the political situation is in Saudi Arabia, the United Arab Emirates, Iraq, Iran, so on and so forth, and other oil producing nations, as well as the United States, which is producing shale oil, and that indirectly caused oil to go, WTI, West Texas Intermediate Crude Oil, to go down to $26 and change per barrel in 2016. So if you hadn't been paying attention to what's going on domestically, at least here in the United States, then you might have looked at the chart and thought, oh, oil is low. It's only $50 a barrel. Well, it got halved from there. Now, yes, it did go back up, but who wants to go through that gut-wrenching experience? So vet or just examine whatever it is you're thinking about trading, even if it's short-term. Know what you own.
Yeah. And you are a very regular investor, have been for many, many years, as your father has as well. What does a day look like for you, David, when you wake up? Have you got your long-term investment positions? I know that you are looking a little bit closely now at cryptocurrencies as well. And if you are investing in any of them, for a typical trader, regardless of what industry or thing we're investing in, what does a day look like for you? Because, and sorry to interrupt, but what I say, many of our students, which we definitely need to back off that expectation a little bit, want to be day traders, but we've got to understand that our current jobs for many people who aren't fortunate enough like us are funding that means to invest. For full-time traders, what does a sort of a typical day look like for you?
I'll take a day trade if the market gives it to me. So if I buy something in the morning and then it goes up 10% during the day, who am I to say no to a gift from the market gods? Okay, I'll take it. Yeah. But my favorite, my wheelhouse, my favorite type of trade, my bread and butter is swing trading. Yeah. I like to hold something for a few days, few weeks, couple months, something like that. Yeah. I also have long-term positions. Long-term, according to the United States Internal Revenue Service, is when you hold for a year or longer. That's considered long-term. Okay. Warren Buffett wouldn't consider 1 year long-term. His favorite buy and hold time frame is forever. But that's his favorite amount of time to hold an asset. So I have my long-term. I'll take a day trade if it's given to me. but we don't all have time to be day trading all the time. Most of the people whom I coach, they have jobs, they have kids, they have college, they have responsibilities in life, and they can't be looking to trade or stare at the screen or at their phone for 6.5, 8 hours a day, 10 out, 12 hours a day. It's funny. People sometimes ask me, they say, Dave, is it possible for me to quit my full-time job so I can day trade? And I say, okay, well, you'll be trading one full-time job for another one.
Yeah.
It's not like but see, people, they see, and I'm not going to mention any names, but they see the guys who advertise themselves standing, next to a speedboat or a Rolls Royce, with an attractive woman under each arm.
Yeah.
The bikini girls, some of which have probably been on my thumbnails for my videos, and they'll give the impression that they work for half an hour a day and that's how they got rich. And it doesn't, at least in my experience, as far as I know, I could be wrong, but I don't believe it works like that most of the time for most people in most situations.
I think we're in the wrong industry then, aren't we?
Yeah, well, but for most people have the wrong idea about what day trading is and what it's like. I recommend swing trading for most people in most situations because it's a nice balance between amount of time that you have to put into it on a daily basis. You can balance that with your work and life, and the amount, the frequency of successes you get. Because if you're very long-term, you won't see a lot of success maybe for years. Whereas with swing trading, you might make a profit in a few days. It could happen, maybe a couple months at the most. So, I think it's a nice balance, the swing trading.
Yeah, we actually did a session with our members a number of weeks ago where we went to help them identify their trader type, and we came to the same conclusion. Swing trading is by far for us the most appropriate strategy, and for us, hopefully profitable for your members and our members as well. So it's a far more realistic means of investing. I couldn't agree more. So getting to sort of our last questions as well, like I mentioned beforehand, I've noticed that you are, whether you be, say, bullish or you're talking a little bit more about marijuana stocks now. In one of your recent videos, you were talking about them as well. We have seen a lot more recreational legalization of marijuana in America. We see it in Canada. We're starting to see it now in Australia as well, even to the point now where it's being used for medicinal purposes and studies, which is huge for Australia because we've been so anti marijuana and THC, CBD for such a long time. Where do you see the future of things like marijuana stocks? And can I ask you also as well, potentially the future of cryptocurrency as a whole as well?
Sure, absolutely. I'll do one at a time there.
Sure.
The marijuana stocks, I believe, is probably a safer bet than cryptocurrencies right now because there's an actual commodity there.
Yep.
And it has shown growth over time. So have certain cryptocurrencies, the more popular ones, in terms of market cap. But if you invest in CBDs, those have become increasingly popular. And that has been helped by the passage of the Farm Bill in the United States, which made hemp legal federally. And so now you don't have to kind of sort of secretly go on Amazon and order your CBD products anymore. You'll be able to get just about anywhere now.
Yeah.
So three more states were included into the list of legalized states in the United States in 2018. And then, of course, in Canada, Bill C-45, the Cannabis Act was enacted. So they've got total adult recreational use is legal over there. Yeah. And how much longer will it be till it's legal federally in the United States? Well, I don't necessarily think it's going to happen in 2019, but I think it is going to happen at some time. And so if you invest in some really good, well-chosen marijuana stocks and just sit on them for a while, you'll probably do all right. It's hard to imagine the prices of those stocks not going up over time if you vetted them. Going back to what we discussed before, if you really research the heck out of those companies. And you can also include some of what I call the blue chips of the marijuana stocks, your Canopy Growth Corp, your Afria, your Aurora, that kind of thing. Tilray I'm a little hesitant on because they went from being pretty much almost a no-name to being the second largest by market cap in such a short period of time, whereas those other ones I mentioned have been around for longer and have we've seen the ups and downs over time, and we saw them survive and thrive over time. So I'd be a little careful with the Tilray. I'm not saying it's not going to go up, but just be aware that it has gone up pretty substantially already. And I don't like to buy something after it's gone up hundreds of percent in a short period of time. I like to wait it out, let it retrace and consolidate a little bit before I get in. So I believe that it still has a huge future. There are many more states in the United States that can and probably will legalize. Some of them have only legalized medically, and so they still have another hurdle, but another opportunity. When they go adult recreational. And then there are other countries around the world that have different varying levels of reform in terms of that. So there's plenty of room for growth. I mean, I'm sure you and your audience members recall when it was legalized in Canada that there were people. Did you see the pictures in the news of lines outside of dispensaries going around the block?
Yes.
Websites getting shut down because of all the orders flowing in. So I'm not worried about at least those big companies that I mentioned going to zero anytime soon. Smaller companies, a little bit more risk, but it's okay to mix up the blue chips, as I call them, with the smaller companies. It's okay to do that. Just be aware that they are speculative and you want to take a small position. In terms of cryptocurrencies, it's a little bit less secure. Took a big hit today. I don't know what day this is going out, but Bitcoin went from 4,000 to 3,600 or so in a span of about 24 hours, a little bit more than 24 hours. So it's a little scary. So I would be really careful with those. Be careful with ICOs because those could more easily go to zero than, let's say, Bitcoin or Ethereum. At least with Ethereum, a lot of those ICO tokens are based on Ethereum. So it has that advantage. It might have some staying power because of that. And then with Bitcoin, it has the brand name recognition. So if you are going to get into cryptocurrencies, you might want to just go on CoinMarketCap or World Coin Index, one of those, and stick to the top 10 in terms of market cap. Maybe don't go down to numbers 99 and 100, that kind of thing. Or if you're going to do it, put very small amounts of money into those. And if I review an ICO or a marijuana stock, be aware that is probably a sponsored video. So, be careful what you get into. You have to make your own decisions at the end of the day.
Yeah, I love that. And, I just want to also acknowledge you, David, for that fantastic information you've given us beforehand and your teachings and helping me personally as a trader. Like I said beforehand, your videos and your writings and your blogs and everything have genuinely helped me profoundly. So thank you. And for people who are interested in knowing more about you, David, where can they go to find you?
Thank you for asking. It's David Moadel, Moadel @gmail.com. And come check me out on YouTube. I usually put a couple of videos every week or so. Just look for Looking at the Markets with David Moadel. Type me into YouTube or Google. You will find me. And also subscribe to the podcast you're listening to right now. Yeah, you got to use all the sources of information you can before you make your own decision. So go ahead and subscribe. You won't regret it.
Couldn't agree more. And like David said, find David on YouTube and at all his areas at Moadel, David Moadel. I highly recommend you look at his YouTube channels to begin with. If you are wanting a little bit of information on trading, like I said, you can just about type in David Moadel, anything on YouTube, and it'll pop up. And his background in teaching and the way he explains things is so clear and concise. It's one of the best resources on YouTube, hands down. So, David, thank you so much for your time. We really appreciate it.
Thank you, sir. Hope to do it again soon.
Likewise.